Good morning, good morning, good morning, good morning. This is going to be a quick test. Let me know if you guys can hear me a-okay. We'll be beginning the stream in around a minute. Apologies for the pre-stream technical issues. But hey, we're up and running now. In today's live stream, by the way, I'll be going over some key levels that you guys need to be looking out for because Bitcoin is at a pivotal point now. Okay, we are at a juncture where Bitcoin is going to be making a move very soon, and I do understand that many of you guys are kind of in a tough position where you're wondering, should you get into position now? Because if it does decide to make a move and move up fast, you're just left in the dust. However, at the same time, it could break down from here, right? So I'm going to be helping you guys navigate through that decision process. In the meantime, while we go through our voice check, etc., make sure to hit the like button. And if you're new here, welcome to the Mango family. We keep it easy, we keep it stress-free, and we keep it fun. How's it going, Neil? We got the beautiful Krisha in here too. Saurav, how's it going, man? It's been a while. It's been a while, buddy. How are you? How are you? This is going to be a quick live stream, by the way, because I do have a dentist appointment that I need to get to. So as much as I'd love to have a long stream today, I just won't be able to. I have the clock ticking against me, got theta on me today. All right, so I think we're going to go ahead and begin because, like I said, don't have too much time. And alrighty, just checking on a couple of things. Alrighty, let's begin. And good morning, good morning, good morning, good morning, good morning, everyone. My name is Michelle Dex, and I welcome you back to the Mango Grove. Oof, okay, so today, guys, we're going to keep it straight to the point because I have a few charts that I have to go through with you guys on multiple time frames. The goal of today's video is essentially to help you guys navigate through this critical point that Bitcoin is sitting in, because I'm so sure I've actually received PMs from many of you guys who are wondering, hey, Sean, should I get into position now because I missed the entry points over the past few months, past few weeks? As you guys know, at Mango, we've been discussing several entry points all the way from the 17K point, right? We had basically 3 entry points from 17K, 19K, 22K. Now, Bitcoin's sitting at $28,000. And we are at a point where Bitcoin could either break down over here or break up. If it breaks up, there's a big move to come. Okay, I'm going to be talking about where we could go to if we do break up. However, we could break down and you may get a much better entry, right? So it is a very difficult position, okay? And I'm not going to come here and sugarcoat things for you guys and say, hey, just buy here, etc., things will be fine. No, it's a tough position, okay? At Mango, we like easy trades. And I have to be honest with you. This current juncture is not an easy trade. It's not, right? Like I've been saying it for the past week now that at this point, at this juncture, I'm not as keen, right, as I was before. Like the past few weeks, past few months, you guys saw the bullishness in me. At this point, I'm mentally kind of stepping back myself, right? But I haven't exited any of my positions because if we do get that next big leg, I want to enjoy it. And now, there are two types of cohorts in our community. People who are already in position, right? And people who are wondering whether they should get into position over here or just got into position, right? It's the same thing, Because at the end of the video, you may decide, I want to get into position. So this is what you're going to have by the end of this video. By the end of this video, I'm going to be giving you guys a clear action plan of how to manage your position if price breaks down, okay? So let's say you're already in position. You will not be surprised on key levels being taken out, and you will at least decide on your own, hey, you know what, I'm going to stay in position knowing that we're going to break down. If you're getting to position over here, you will know how to de-risk once those key levels get taken out, all right? So if you're getting into position for the big upside, you're going to have an action plan to de-risk on the way down if things don't work out. If you're already in position, you're going to have an action plan to take profits if things start breaking down, okay? That's the goal of today's video. So we're going to be starting off with the dashboard like we usually do. There's something really interesting going on over here. Really interesting going on over here that I want to talk about. But before that, a little bit of housekeeping on BitGet, on BGB. There's some drama, FUD, some issues. I'm not sure. I haven't read. I've not read into it. I'm sure you guys, some of you guys may have. So yeah, look into it. And regardless of whether you guys believe the FUD or not, I suggest de-risking your counterparty risk off the exchange, right? Whatever you're not trading on there, just remove. And if you're trading leverage, reduce your counterparty risk, reduce your margin, and increase your leverage, right? If your coins are available to trade on layer 2s, I would recommend, like if you're trading Bitcoin and Ethereum, layer 2s are a viable option now, right? You can trade BTC and ETH on leverage on layer 2s. There's no reason to have your funds on an exchange if that's all you're trading. But yeah, just be safe. It could all be nothing. I've really not looked into it. It seems like drama to me, but personally, I'll be de-risking because, hey, why not, right? A bank run is a bank run, right? It doesn't matter. Something could be completely false, and a bank run could still take an exchange out of business. That being said, the only token that I'll likely leave on there is my BGB position because it's currently doing really well. We got into position all the way down over here around 19 cents, and regardless of the drama, this thing has been going up all morning. So that is a bit confidence inducing, but is it enough for me to keep all my funds on there? Hell no. So yeah, if you guys are in the BGB trade, look into this. We're currently sitting at weekly resistance. I'll be looking to this is my plan for BGB. I'll be looking to take profits throughout the day, right? Then I'll watch the coin over here to see how it performs over the week. If it actually closes above this bull flag, I'm likely going to put my funds back into the exchange and get back into position in BGB as well, right? Because over here, this is looking fantastic. One of the best looking charts in crypto, okay? And it's being attacked at the moment, just like Binance got attacked, just like FTX got attacked. I'm not trying to pick sides here, by the way. I'm just saying an attack could be legitimate. FUD could be legitimate. We don't know, okay? So that's the housekeeping. I just want to let you guys know. Be safe, right? Remember at Mango, don't trust any exchange. Don't trust any exchange. That's our philosophy. Okay, we put funds in there to basically use leverage to defer counterparty risk and take advantage of the exchange funds, right, while putting on good trades. Okay, with that, let's go ahead and begin with Bitcoin. Remember what the goal is over here. The goal over here for Bitcoin is to set up an action plan if prices break down over here. Okay, if you guys are already in position and have been in position following Mango since the 17K, 20K regions, you guys are well in profits, you guys will have an action plan to take profits if you choose to take profits. Or you'll have an action plan to add to your position, okay? if you entered over here, which is a difficult situation to enter, you will know how to de-risk. Okay, we're going to go ahead and hit the brand new feature on the dashboard, the drop down over here, where we can see all the time frames with their trends and their volatility structures with the flags, right? Ichimoku, bullish divergence, bearish divergence, etc. And there's something really interesting going on over here. I'll give you guys a second to take a look at the picture, right? This gives you a really good picture of what's going on without having to look at the charts. And the charts can get overwhelming. And this puts it very succinctly. There's something that's happening over here that I talked to you guys about like a month or so ago, a very similar picture, very similar picture. I'll let you guys take a quick look. If you guys are watching this on the recorded version, right, the non-live version, hit the pause button. Use this as an exercise to, figure out on your own before I give you guys my view. You guys could have a different view. It doesn't need to be. Not having my view doesn't mean the answer is wrong, by the way. Okay, I'll just tell you guys what I'm seeing. All right. So what I'm seeing is we have long across all the time frames, which is really good. Volatility has been crushed on the 4-hour, the 12-hour, the daily, which is very, very appetizing, right? Because volatility compression leads to expansion, okay? The 2-day volatility is a bit concerning, okay? It's pretty high, pretty high. We have bullish divergence on the daily, bullish divergence on the weekly with Ichimoku call on the daily. Okay, cool. So we have long trends across the time frames, okay? That means we've been trending long. We have bullish divergence on the weekly, so underlying bullish divergence on the higher time frame with underlying bullish trend on the higher time frames. Okay, that's good. That pressure from underneath is really, really good to push prices higher. However, on the time frames, the volatility is really, really compressed. We have been trending for a very long time. 22 days on the daily, 23 days on the 12-hour, right? And 19 days on the 2-day as well, and the wall is pretty high there, which is not appealing. And only 4 hours, only 6 hours on the 4-hour time frame. We just switched. We've been kind of like oscillating, right? When you're long on the higher time frames, the lower time frames, by high I mean like the weekly, the 4-day, etc. The lower time frames are going to oscillate. What this is telling me is that we've gone far too long without a move on the daily and the 12-hour. Far too long. Once we reach around the 30-day mark, right, guys, I want to start seeing this volatility reset, right? And at that point, I get a bit concerned. I'm like, I don't say concerned. Concerned is not the right word. But at that point, around the 25-day mark, the 27-day mark, you want to have that next leg to the upside. Okay, you want a reset of volatility. If not, the trend is going to start getting tested to the downside. The higher time frame trends get tested. The 2-day time frame will get tested. The weekly will get tested. But remember, we have weekly bullish divergence, so we're expecting the weekly levels to hold. We'll be expecting I'm not so sure about the 2-day because the wall is pretty high, but the weekly and the 4-day, I'll be expecting it to hold. So that's my view, just looking at this picture. All right? Now we're going to go on over the charts to see whether we can validate, confirm, or get a little bit more confluence on that view. So right over here, we're going to be starting with the daily, and we have our Bitcoin consolidation over here with our RSI. What I'll be basically showing you guys now is the bullish divergence that the dashboard has picked up. Okay, so there's one really easy way to look for like a guide on bullish divergence. Just look at the structure. The structure is in an uptrend, right over here, guys. We have like a rising bull flag, but when you go ahead and look at the RSI, what's the RSI doing? It's in a downtrend. We have a falling bull flag, okay? That's a very crude way to look at it. If you guys want to look at it properly, you want to look at the high lows, and essentially you're looking at this point over here, and this point over here, and the corresponding areas on the chart, which is this point and this point, right? So higher low over there, and lower low over here. Let's go ahead and look at it properly. Zoom in for you guys. Yeah, smiley face. Okay, so yeah, you guys can see that that's a lower low right over there, but price is put in a higher low, right? marked it out for you guys right over there. So that's your bullish divergence. Okay. However, we want to see continuation on that very, very soon. This bullish divergence gets negated like that as soon as we take out this low over here. Okay, we take out this low, we get negated. But waiting for that, we'll put some of you guys in some pain if you got into position over here, right? If you're already into position from way underneath like us, you're fine. You can wait for that. Okay, so now we're gonna go on over to our next chart. This is where things get really, really interesting. This is the daily time frame on the dynamic. Okay, we have the dynamic showing over here too. This is suggesting that we have a test of the day dynamic very, very soon. However, notice this thin horizontal line that I've marked over here. That's our 12-hour dynamic, okay? Because we haven't really been respecting the day dynamic because we've been getting picked up earlier and earlier and earlier. And remember, the 12-hour time frame has been sort of like our guide, our barometer on the dashboard, and it's been working really, really, really well on the dynamic too. Let's go ahead and turn off our horizontals. You can see how we've been respecting the 12-hour dynamic really, really, really well, okay? Over here, we close underneath it, but got picked up and close above it right after too. But now look how thin the dynamic's getting. When you see the dynamic getting thinned out that much, guys, that's usually a sign of volatility coming up very, very soon, okay? To the upside or the downside, we don't know. If it breaks to the downside, then we know it's towards the downside. Now, you can use this in confluence with the dashboard is telling us. The dashboard is also telling us low volatility, right? So we're seeing confluence there. Volatility compression leads to expansion. The dynamics also telling us something very, very similar, right? Right over here, that we are thinning out. That means we're going to get a move soon. Is it to the upside or is it towards the downside? Well, if we break this level over here, I'll be looking for the daily dynamic to get tested right over here. I should give you guys like key levels actually. Give me a second. The 12-hour dynamic is coming in at 27,867. The daily dynamic test will be coming in at 27,111-ish, okay? Now, if we break the daily dynamic, I'll be looking for the bottom of the dynamic to get tested right over here at 25,751, okay? So if we break 27,000, we're down to 25,000. We are likely to test 27,000 if we lose the 12-hour dynamic at 27,800. So 27,800, we lose that level, we're looking towards 27,100. We lose 27,100, we're looking towards 25,700. Keep it that simple. Keep it that simple, okay? Keep it that simple, note it down, and you guys will be able to start de-risking on the way down, taking profits on the way down, okay? Now, next chart I have listed for you guys over here is the mango ribbon. Now, this is one of the more bullish charts, right? Because we have the Tenkin shooting to the upside and price actually testing it and getting picked up. So this is where the bulls would be looking to step in, defend that Tenkin. By the way, this is the mango ribbon, available completely for free. You guys can contact either me or Krisha on Discord. You can get into our Discord by joining the mangoway.com/Discord, and we'll give you guys access to the mango ribbon. This is a convenience indicator that basically allows you to have multiple indicators on one chart, right? Just keeps your life easy. So it has the EMAs, SMAs, Tenkin, Kijun, mango settings on all of this. So yeah, if you're using the free version of TradingView, you can have all your indicators in one chart. So yeah, Tenkin right over here, shooting up. If we lose the Tenkin, we still have the daily 21 EMA underneath. So the bulls are looking at this chart favorably. The bears, though, are looking for the daily 21 EMA to be lost, but they have the Tenkin to contend with first. If we lose the daily 21 EMA, I'm looking for a move all the way down to the Kijun based on this chart. All the way down to the Kijun. That's 24,600, right? 24,600. That would suggest that if we see our daily dynamic get tested, we could see a wick down to 24,000, which would be somewhere around here, I believe. Yeah, somewhere around here. And then close above the data. That would be the more bullish thing to happen if we lose the top. So basically, a wick down here, close above here. Okay? Because Kijun is right down there, guys. 24,000. If we lose the daily 21 EMA, daily Kijun could get tested. Okay? But Tenkin needs to be contended with first. All right. What's the next shot I have for you guys? Okay. This one right over here. We'll take a sip of water first. Okay, so now this is one of the more. Should I go over this again with you guys? Okay, so essentially a couple of weeks ago, Kusha and I talked about the chart in our duo video, right? I essentially talked about the tap zone, kill zone, which we were watching very, 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 very carefully all the way back last year, right? This was like somewhere around June 2022. We're looking at this. I'll zoom in for you guys. We're looking at this zone over here. This chart is specific to Binance because it had the lowest wick. Sorry, the highest wick, right? So it was a more conservative way of looking at the charts. So we marked out that zone over there while price was sitting somewhere around here. And we said that if Bitcoin comes down there, one of two things is going to happen. We either tap that zone or we kill right through it, right? It's called the kill zone because if we don't tap and bounce, Bitcoin's going into like the depths of the bear market, right? And it did exactly that. That's why I named it the tap zone, kill zone at the time. I kept this chart because at Mango, we know that key levels that were previously important, when tested from the underside, are going to be just as important. We closed above it, and every wick has been testing it, right? So if you were looking to get into position, that was a key level to be bidding. And we tested it twice now, 26,000, 26,000, 26,000. If you're coming down again to test it, it's a similar story. We need to tap it and close above it, right? Or we kill through. That's how simple we keep it, guys. It's still the tap zone, kill zone. But this time around, I won't be looking for like a deep bear market. At the most, I'll be looking towards 22,000, right? That's as bad, I think, as it will get. If we lose 22,000, then yeah, we're back down here, right? But still, we still have 24,000 to contend with. We still have 22,000 to contend with. So you need to be watching the weekly level, 26,588. That is a key level as well. Okay. Now, to wrap up, we're going to just quickly talk about this chart over here, which is essentially what we've been trading, the equilibrium trade on the weekly. Tenkin coming in at 22,000. We essentially were looking for the Tenkin to break all the way down over here. We did. Broke through it, and we're looking for the Kijun to be met at around $32,000. We're not there yet, but once we do get there, things are going to get really, really interesting. There's something fun going on over there, which I don't have the time to talk about just yet. I'll be talking about that in the next live stream. So if you guys haven't subscribed yet, haven't hit the notification icon, make sure to do so. But yeah, you guys can essentially trade the weekly based on these levels over here. The 200 EMA coming in the middle of the range at 25,000, the bottom of the range coming in at 22,500, and the top of the range coming in at around 32,000, right? Ichimoku settings. All right, so with that, I think I'm going to be wrapping up. I hope you guys enjoyed the stream. I wanted to keep it 15 minutes, but we're around the 23-minute mark. But yeah, covered a lot. So yeah, until the next one, do the Mango way, do the easy way, do the stress-free way, guys. Ciao.